let's talk about the ones that you're trading first and foremost. This is the first one I'm going to bring up is one that we've spoken about many times before, and that is, of course, Woodside. Now, this is the interesting part about Woodside, because obviously we've seen what's been happening in terms of the crude prices kicking higher, and they've got a substantial oil portfolio, but gas has been absolutely belted of late. And considering they did that nomenclature thing and they put a lot more in terms of exposure to spot, does that hurt them so much moving forward that nat gas prices are basically in the troughs, and then you've got crude prices spiking? Is there enough of an offset there?
Yeah, so with the portfolios, is much more weighted to oil now. They've got the BHP assets. But ultimately, we look at it, these are very good value assets. And I think the gas price doesn't reflect the level of tensions in the Middle East. If we do see the Straits of Hormuz or further the Red Sea shut, suddenly the Qatari gas is going to be very difficult to get out into the world markets. And that'll look very good for Woodside's assets. I mean, indeed, in the last 6 months, we've seen Woodside sell 25% of their Scarborough LNG for US $2.8 billion to a consortium of Japanese utilities with long-term offtake agreements. Surely these people are seeing sort of very good value. They're willing to put cash down on the table to get access to these assets. They've also called off a potential sort of value-destroying merger with Santos. I believe we spoke about that last week. Atlas were very unhappy with that. It's good that they've done that. And overall, this company looks pretty cheap. So using a $70 oil, we've got spot at $85. Woodside's trading on a very undermining P of 9 times with a 7% fully franked yield. And in the last 12 months, last 6 months, we've seen oil prices up 12%, but Woodside's share price has fallen. So it looks to be pretty good value, and so a great set of assets.
Really quickly, Hugh, because I do want to get to some of your other ones, but just in terms of M&A, do you foresee them getting acquisitive in other forms? Because I know we could talk ad nauseum about Santos, but I think of a little bit different companies that they could possibly attack, or not attack, but potentially buy out. And what about one like Karoon, right? Because they've got, the old oil search boss on their board, Peter Bodden, and they've got assets in the Gulf of Mexico, so does Woodside. So if they wanted to grow, could one of the mid-majors or smaller players, Australian players, be on the cards, not Santos?
Yeah, I mean, as a shareholder, we prefer them. They've got enough on their plate as it is. Integrating the BHP assets, getting Scarborough off the ground. Focus on what you've got, guys. Hunting around for extra the smaller bits, which often they're a little bit worse asset than you currently have. I would be very unhappy to see them do that. Just focus on getting Scarborough off the ground, Trion in the Gulf of Mexico. There's enough on your plate. Don't take those calls from the investment bankers in $4,000 suits.